Welcome, everybody. It is fun times in the market. SMC is dying. China is flying high. Utility stocks are acting like AI stocks from a couple months ago. And we will get into all that stuff later on. But it is time for Technical Analysis Roundtable. We want to come here and we just want to talk nerdy to you guys as much as humanly possible. So we're going to get through everybody's philosophy on technical analysis, how they use it in their trading, and so on. And so on. So how is everybody doing out here today?
Busy day.
Yeah, it really, really is. Derrick, how are you doing?
P&L is green. I'm happy. So life is good.
Okay, see a big smile on JR's face. So what's going on with you?
All's good, man. Great day. Loving this market. You know, you got to embrace the chop sometimes.
Okay, well said. Okay, so topic obviously today is technical analysis, and big thing is we're gonna talk about it is how to use it in the midst of all else that is going on, because we all have opinions on the economy and companies, et cetera, but if you are a self-proclaimed technical analyst, like how do you balance all this stuff? So Sami, I'll kick it off with you. So could you talk about like how much of your style is predicated upon just the charts?
On a scale of 1 to 10, I think I'm about an 11, meaning 100% of my trading is based on technical analysis. I was trained professionally to analyze the fundamentals. I was an auditor, an accountant, a CPA in the past. So I know how to do it better than most people, but I don't find any value in doing it. In fact, it often interferes when I have opinions about certain things. It often interferes with my technical analysis ability and my ability to stay objective and true to price action, to reading price action objectively. So I give it absolutely no value to when it comes to my trading. I can say more about it, but I just don't want to hog the mic too much. So we'll come back to it later.
Okay. All right. So Derrick, so you and I were having a conversation this morning about China. So you've been bullish on China, and it sounds like a lot of your case was fundamental, was related to monetary policy. So how do you think about charts in the context of sort of those fundamental backdrops?
Sure. So I describe myself as like 85% technical, 15% fundamental. I find value in fundamentals in developing a thought process for the market, for a sector, for an individual name, whatever it is. But the technicals have to confirm that thesis. If I'm thinking one thing, but the technicals are telling me the opposite, I always go with the technicals, which means I just won't execute on my idea. But when they come together, that's when I find that my P&L is biggest. I have an idea, the technicals confirm it, the technicals tell me how to enter, how to manage risk, how to manage reward, and those tend to be my biggest trades. So when you look at like a JD or an Alibaba, since you mentioned kind of the China trade there, I've been really bullish on those names for quite some time. They built out really big bases after having fairly dramatic falls from grace as the Chinese economy has struggled. And everyone's been talking with China about, well, why won't the government stimulate? There's constant disappointment that there's not enough stimulus coming from the Chinese government. What people, I think, failed to realize is that the government was fearful to stimulate because they didn't want to devalue the yuan. For them, keeping a strong currency that they want to potentially someday compete with the dollar is of paramount importance. So what the Chinese government needed to begin to stimulate was for the Fed to actually begin cutting interest rates, which then reduced the value of the dollar. If you look at a chart of the dollar or chart of the UUP ETF, you can see it's been coming down. Fed begins to cut. China says, all right, now I can come in and I can stimulate without worrying as much about debasing the yuan. And then that's, the timing of that couldn't have been more perfect. Then you have these beautiful technical bases, and Alibaba and JD, they're trading fundamentally very cheap. JD was at like a forward PE ratio of 6. Doesn't mean that it can't go lower, but when you combine that with a strong technical base and then it broke out of that base, broke through some resistance levels, for me, that's just like a perfect trade.
Okay, before I throw the question to JR, let us know in the chat where are you watching from. We have Team Pro Desk is being represented. So, guys, let us know where you're from in the world, and if you're in one of the T3 Live VTFs. Okay, so JR, you and I have a lot of very strange conversations involving like conspiracy theories and societal trends, and JR has a very deep like tech background. So when you're talking, because JR and I had to talk about like things like data center stocks and utilities yesterday, areas where he has a lot of expertise. So how do you sort of balance that industry knowledge with what you see on the charts?
In a certain way, I'm completely with Sami in the sense that you could be right fundamentally, but if the chart doesn't confirm your idea, you could be wrong for a long time, and the market can remain stupider a lot longer than you can remain stupider. So as a technician, my job is to come up with ideas, sometimes based on fundamentals, sometimes based on sentiment, sometimes based on general order flow, and then make sure that I'm making decisions based on what the chart is telling me. Sami, and the downside of working with or being in a room with guys like Sami and Derrick is they get to say all the smart things first, and I don't really have a lot else to say. Technical analysis is a really important tool. The problem is that you take technical analysis and you think of it as say technical analysis is an Allen wrench. Most people use it as a hammer. So I think that the danger of technical analysis, especially for novice traders, is its misuse and abuse. Technical analysis, if I were to define it, is the quantitative and graphical representation of supply, demand, and the market cycle. And most important of all, it's the best tool we have for risk management. And I think the biggest challenge for novice traders coming up, and even for advanced traders, is its proper use.
Okay. Well, so all right. So I'll throw it back to Sami in just a minute, but of course we have to play a little game now that the room is full, and it is in T3 tradition, 2 truths and a lie. I'm going to make 3 statements. One of them is a lie. Everybody has to try to guess the lie, and out of JR, Sami, and Derrick, whoever says the right answer first, whoever identifies the lie, is the champion. There are no points for second place. So I'm going to make, these are our 3 statements. Tesla is the worst Mag 7 name in 2024. Number 2 is QQQ is beating XLU this year. And number 3 is FXI is beating SPY. So whoever identifies the lie is the champion.
It's the first one.
I'm going to go with the second one, but I feel like it could be the first one also because Google hasn't been too great. But I'm going to go with the second one. XLU's been on fire, even though I never trade it.
JR?
That's a close one. I think it's 1.
Okay, the champion is Derrick.
Oh, nice. Look at you. Well, champ.
XLU is crushing QQQ. So Derrick is a champion kickboxer. He's also stolen Sami's title. Sami, I'm sorry. Derrick is now the world champion. These things happen, and we'll give our friend in the audience, Topher is the people's champ out there. So Derrick is the world champ. Topher is the people's champ. Okay. This person says Sami's been holding that yin since beginning of the year, and it's on fire. So yes, Sami's been a super China bull. I know he's been on Alibaba, Yumsi, and some other ones. Okay, so Sami, so back to our little program. So Sami, what do you think the biggest mistake people make with charts is?
The biggest mistake, here it is, if you're ready. The biggest mistake is that we all think that chart analysis and being a technician should tell us where the stock is, should give us the ability to analyze any and every chart and tell us where the stock is headed. And that's actually wrong. Technical analysis is, for the most part, is not applicable to most tickers that I look at. Meaning, most tickers that I look at, I couldn't tell you whether it's higher or lower. Technical analysis So by using technical analysis, I still can't tell whether it's higher or lower. You use technical analysis only on the things that that stand out. So what I'm trying to say, when I'm having a hard time saying it, is I don't use technical analysis to predict where the stock is headed or the direction of the stock on every chart that I look at. I use technical analysis on only the charts that show certain patterns that look really, really good. So we don't become technicians so that we can predict every chart or every stock's direction. We become technical analysts so that we know to exclude most everything that we look at and only focus on the best of the best, if that makes any sense.
Okay, yeah. Okay, so so for Sami, so for you, it seems like it's a sorting process to help you get through everything faster. So okay, so Derrick, how about you? What do you think? Like, where does technical analysis fail?
Sure. So I think that especially newer traders have this mistaken belief that technical analysis is as simple as just memorizing chart patterns. Memorizing bull flags and bear flags and wedges, and you're going to go be a billionaire trader. It is not that easy. If it was that easy, we would all be billionaires. You develop your pattern recognition skills when you're like 4 years old. So I could teach a 4-year-old what a bull flag looks like, and then they could go become a billionaire trader. The market is so much more dynamic than that. There are so many influencing factors that affect the market at any given point in time. So it's one thing to be looking at a bull flag, but is that bull flag being confirmed by proper volume? Is the market also moving up as this bull flag looks like it's going to break out? Is this an area or a sector that has relative strength? Is there a large degree of extension, which means that bull flag has a lower probability of success in breaking out at this point in time? And then on top of that, how do you execute? How do you actually enter that trade and maximize reward if it's right, and minimize risk if the idea is wrong or the lower probability situation comes in where that trade actually fails? That's the stuff that I think really trips a lot more people up. It's not just, hey, I'm going to go memorize a bunch of chart patterns and go be really successful. And knowing your chart patterns is obviously important, but it's how do you develop good game plans that manage risk and maximize reward? And how do you understand all of these other dynamic layers of probability that are going to affect and influence any and every single trade that you're getting involved in?
Okay, all right. I'm gonna flip back to Sami, because like everybody on here has a different system that works for them. But like I can go to the library and there's 50 million technical analysis books. There's all these different methods. So I'll ask Sami, like you grew up basically with the pristine system.
Correct.
How did you know that it made sense to you?
So exactly. So this is the thing, is that technical analysis is not really about, as Derrick said, about memorizing stuff. It's about understanding why stocks move or price action moves the way it does. Once you have a solid, comprehensive understanding of why things move the way they do, which means you have also a good understanding of trader psychology, right? Then you're home free. Then you can focus on specializing in certain areas. Now, why the pristine method why I adopted the pristine method, because initially when I started out, I didn't know what I was supposed to look for. But the pristine method made perfect sense, because every time I probed there was an answer. Every time I had a question, every time I had a doubt, there was an answer. It could be answered. So I used to say, when it comes to the pristine method, which is what I trade, the logic is intrinsically valid. I challenge you to ask me any question about, when it comes to charts, about any pattern, anything you want, and I should be able to explain it. I could say, this is way too sloppy. I can't make heads or tails out of this chart. Yes, but I'm just saying, when there is any kind of a move when there's any kind of a matter of a pattern, I can and I should be able to always explain the psychology that led to the formation, to that pattern, to that trend. So the pristine method, to me, again, the reason why I decided this is it, this is the this is the one that this is the methodology that I want to trade, is because it made perfect sense. Every time I tried to poke a hole, to ask a difficult question, there was actually an answer that was logical, rational, that didn't require me to believe anything, to believe a conspiracy theory, to believe something that I couldn't verify for myself. So that's what I liked about the pristine method. And once I decided this is it, I never ever looked at anything else ever, because I got it. I feel like I got it. Why would I want to waste my time looking at Fibonacci retracements or what this guru thinks about trading? I don't. So I never did. So that's if that makes any sense, Mike.
Okay. All right. So I'll throw it over to JR. So JR, I know you're a big fan of Wyckoff. Like, what about that appealed to you?
Well, you can ask 3 traders who took the same trade why they took the trade, and they'll give you maybe 3 different technical reasons. The bottom line is, do you understand the auction? Do you understand how to find inefficiencies in supply demand? So you can take advantages of those inefficiencies and imbalances. That's what generates momentum typically. That's why I always tell my traders, find an edge in the market. Find an edge in the market that works for you. I'm very transparent about sharing how I see the market and what I do. But ultimately, technical analysis is a language like English or Japanese. It's just a way of representing the market graphically and quantitatively. It's like walking into an auction. I live in northern Idaho. It's a very rural part of the country, and my boys love to go to cattle auctions and car auctions, right? You go to the auction, you can't understand a single word the auctioneer is saying until you get some practice in it. And the technical analysis is a tool for understanding the dialogue between buyers and sellers. Once you finally begin to get a handle on that dialogue and understanding how the auction works, then comes the hard job of becoming a trader. Becoming a trader goes far beyond technical analysis. You're actually out trying to outsmart and outwit other market participants, understanding their psychology, understanding the auction, the stage of the price cycle, order flow. These are all the things that particularly give me an edge in the market. And technical analysis is just phase 1 of that. That just means you're going to the restaurant and you can read the menu. Becoming a trader really is the second leg of that journey. And I think that's where a lot of traders get mixed up and tripped up. I'm surrounded by really smart guys, and I think they pretty much said this, but anybody can learn at Bull Flag. It's understanding what all the other factors involved in that particular pattern really reflect. Is that really a door on the wall, or is it a painting of a door? You have to deal with that apophenia, the idea that the mind likes to recognize certain patterns. The problem is that if that pattern you're looking at isn't undergirded by a weighty reality paradigm in the supply demand imbalances you're trying to capture, you're really going to take a lot of losses in the market. So, this order flow undergird your theory. Are you buying a bull flag into an overhead supply zone? Are you, in stage 3 of the market, into a major upthrust and about to trigger a major sign of weakness? Like this morning, I told my traders, I am not interested in taking any longs whatsoever. Where we were looking at the cues, and we're gapping right into a major overhead supply zone, a value area low with a ton of stuck sellers, right? And I'm sure there were people, excited about Micron and semiconductors today, trying to capture an opening range breakout. And I told my traders, guys, that idea, in my opinion, is utterly absurd. You're dealing into you're gapping up into a giant wall of sellers here. The only thing I'm interested in doing here is capturing some downside momentum. So that that comes with a little bit of experience and understanding the market cycle beyond just sticks on a chart. If you know what I mean.
Okay, yeah. So on this topic of pattern recognition, so this is one thing I've always wondered about with you guys. So Derrick, when a chart pops up on your screen, how much are you actually thinking about it? Or I mean, like, do you just see it and understand it on the spot? Like, are you actually thinking like specifically about whatever it is, like specific indicators or something, or do you just kind of look and get it?
At this point, and I think that my degree of experience in trading has something to do with this answer. At this point, I can just look at a chart and give you an opinion or tell you that I don't have an opinion in a second, basically. I can just kind of instantly just see the chart as it comes together. But that's, 15 years of looking at charts every day, all day, that kind of got me to that point. And very often, if you just give me a random symbol, I'll look at it, and first I'll say, hey, I really don't know this company very well. I don't know how this thing moves, because there is something, I think, to having understanding of certain stocks and how they move. You can trade them a little bit better. But also I can just look at this and say, hey, this thing is at the midpoint of a range here, and I don't really see any edge in either direction. This is just not something that I would want to be involved in until a better pattern presents itself. But to directly answer your question, for the most part, I can just see a snapshot of a chart and be able to give you an opinion on it at this point.
Okay, so JR, I'll ask you the same thing. I would say rather, what's your ratio between looking at a chart and getting it?
I mean, I'm the same way as Derrick. If you stripped all my indicators out, I can pretty much tell you where the view up is, the 21, the 8. I can tell you whether I like the pattern or not. I can tell you whether the pattern itself looks actionable, but that's really not what I focus on. I always tell my traders, the one thing you need to ask yourself before you consider something actionable is it in play? Okay, it's not risk versus reward. It's risk versus reward versus probability. What kind of expected value can you get out of this move, given all market conditions, sentiment, order flow, technicals, the overall market. There's so many different variables I look at, but the most important one is it in play?
Yeah, our friend Ken is saying in the chat, only applies to stocks in play. Okay, so I think this topic of indicators is interesting. So Sami, I know your charts are very stripped down. It's the 20 and the 200. Do you think most people are overcomplicating things?
I think so. The only thing that really matters is price action, and if you know how to read price action, you don't need additional tools to help you read it. And I do use moving averages, the 20 and the 200 mainly, basically, mostly as direction to speed up the analysis of the chart, so that as directional guides. The moving average is going way up like that. Obviously, that's a bullish chart. That's a bullish stock. But most people have spaghetti charts, a million different moving averages or indicators, and that just complicates things. So yeah, I totally think that most people have way too much going on their charts.
Okay, all right. So let's talk a little bit about 2024. So I do feel like people have a tendency to get attached to certain narratives, especially boogeymen like the algos, the HFTs, the hedge funds, the Fed, et cetera, et cetera, et cetera. But so Derrick, in terms of your overall strategy, has anything changed for you in terms of what you're doing over the last year or two?
Yes. So definitely agree with you. I think that people like to blame failure on all sorts of things, the algos, this or that. The fact of the matter is that markets are constantly evolving. So the market trades differently now that it trades in pennies than when it traded in fractions. The market trades different now that there's algorithms compared to when there was only humans. The market trades different now, and this is probably a more recent one. The market trades different now that options have increased so dramatically in terms of their overall volume, and that zero DTE options have become a thing. So while the core tenets of technical analysis, I really think will always apply, understanding the supply and demand dynamics as represented through charts, I also think that you have to understand how the market environment has changed over time to give you a better understanding of which of those technical setups will work better in any given environment. And I have increasingly over the course of the last couple of years have implemented into my strategic thought process what I refer to as market dynamics, which is actually something that I basically consider to be a subset of technical analysis at this point, right? Because if all technical analysis is the study of supply and demand, right? And a market dynamic that I pay attention to now is the market's overall gamma levels, the S&P gamma levels. So I know that if I'm looking at a market that has an S&P gamma of positive $10 billion, what does that mean? It means that as the market moves higher, every 1% that the market moves higher, the market makers, in order to remain hedged on positions that they have to sell $10 billion worth of S&P. Well, that has an influence on the market. That literally is technical analysis. It's supply. It's just understanding supply in a slightly different way than looking at a resistance zone in the chart. And this is really only stuff that I started looking at in the last couple of years. And if I'm looking at a market that has, a positive gamma of $10 billion versus a market environment that's a negative gamma environment, what does that then mean to me when I'm developing game plans for those technical trades that I might be implementing? Well, that positive gamma environment is going to be much more mean reverted. I'm going to get much less follow through from the market. That negative gamma environment is going to be opposite. I now have a higher probability of trend and momentum continuation from the market. So then I need to be having a game plan where, all right, if it's a positive gamma environment, there's a lower probability of continuation. I want to be booking profit on, with trend or with momentum style trades much more quickly, because the probability of me getting lasting follow through is reduced. Whereas if the market's in a negative gamma environment, the opposite is true. I want to be much more greedy on those game plans that I'm developing for myself to look for significantly more follow through. And that's just really one aspect of how I think markets have evolved over the course of the last few years, that if you can add that into your game, it can have a significantly positive impact on what you're doing. And I know for my own P&L, it's had a significantly positive impact on what I'm doing.
Okay, JR, how about you? Has anything about your strategy changed this year?
Not really. I mean, you have to remain ever vigilant in terms of the personality of the market. I think looking at GEX, as Derrick mentioned, is really important, and really understanding what's more likely to happen in terms of the personality of the market. A lot of times you'll get a buy the dip environment that just basically bounces off that high volume pivot low anchored VWAP or your 8 EMA. And other times you're really in more of a markup period after a period of reaccumulation, and the market's just marking up aggressively. You really have to recognize the difference in the dynamics for sure. 100%. I couldn't agree more.
Okay, Sami, let's move on to Sami. I apologize for interrupting you. Well, Sami's always, I don't know what is going. Sami's trading 24/7. I would love to be a fly on that wall one day. Okay, so little bit of a random question. We're going to make a hard pivot here before we get to talking about what's happening in the market now and everybody's favorite names. So, Sami, do you use any AI technology in your trading?
I do use. I have a couple of algos that I run, but not necessarily AI. I think AI is going to be useful. Like I can't wait to to have AI involved in my trading, because for certain things it could speed up the manual process basically. But currently I don't use AI.
Okay, JR, how about you? Are you using any kind of AI in your trading?
No, I'm proudly robot free for the moment.
Derrick, how about you? Do you have any a little robot army back there?
No, very minimal. More like I'll use like a chat GPT sometimes for broader research when I want some information real quick, but not for anything, risk execution related or anything like that. So no.
Yeah, I think AI is still hard to rely on for a lot of things and gets basic numerical things wrong all the time. Okay, so we're going to go around. Everybody will give their opinions on the market environment, and then we'll share our number one names. And Sami, I mean number one name, not 25 like last time. Though you were right on those names.
I didn't know I was supposed to come up with I was right about all the names that I mentioned in that, remember?
Yeah, you are. Sami had like all the value stocks like AT&T and I think
3M.
Yeah, all these boring,
but that's not value.
Yeah, all these boring stocks that went up like 30-40%. Okay, so Sami, so what do you make of the market environment here?
What do I make of it? So can you be more like can you be more?
You like it? Are you still? So Sami's been he recently said, he was very emphatic last week saying the market bottomed, it's going up. Are you still bullish?
Oh yeah, absolutely. I am. I think we're going to see a transition out of equities and into Bitcoin. I'm loving Bitcoin right now, the way it's looking. These are the Bitcoin charts. So yeah, I do like the market, but I also feel like the market is a bit tired. It has moved up so much, and I think I'm suspecting that the money is going to be starting to flow more into Bitcoin and maybe other alternative things. Like we're seeing China right now. Of course, there's 3 different positions in the newsletter. China names that we have, long-term plays such as BABA. I also have a couple more that I just added a couple of days ago, like the EDU, the MNSO. So I think maybe the U.S. equities will probably slow down a little bit. That's what I'm thinking, and other areas will start to see an inflow of money, and I'm predicting Bitcoin is about to take off. We'll see.
Excellent. Okay, JR, what do you think of IWM? Now, this is just a joke. JR and I have a running joke about the silliness of obsessing over IWM. So what do you think of this big old market here?
Well, the last time we had a shindig like this with a bunch of my T3 colleagues, I was really bullish on the market. I was calling for SPX 5750, and it looks like we're there. Now I'm a little bit more cautious. We're grinding higher in very weak technicals, specifically the Nasdaq. In terms of your general point of control, your most traded volume, it's much lower. And today we're having that initial bump into the prior distribution top around 493.50 or so. It seems to me like a back test, a backfill into those prior weekly levels is very likely, especially in the Qs. Technicals are poor. Market breadth is really poor. And I'm getting that gas station sushi vibe off the order flow. So I expect us to go a little bit lower. That daily 21 on the Qs needs to be retested. But I think we're probably in a holding pattern into the NFP.
Okay.
On-farm payrolls.
I like that gas station sushi. I was thinking about Rite Aid sushi, which is also pretty scary.
Pretty scary.
Okay, and our friend Wilson says JR is long Picard, so we definitely have our Momentum Express family in the house. So Derrick, where do you think goes from here? Where do you think we go from here?
The gas station sushi has me cracking up. Is that? Is that like a chart pattern that I haven't learned yet? The gas station sushi pattern. You know,
Yeah, come to the open house, Derrick.
I still find that I'm learning new patterns all the time. I just learned about like a doji burrito a couple years ago for the first time too.
Nice.
Oh man, it's too funny. Yeah, so going back to what I was saying earlier about my approach that I guess differs with these other brilliant traders a bit is I do implement a little bit more of like a fundamental thesis to my trading, even though I'm primarily technical. And the fundamental side has honestly had me pretty nervous as we're in a weak period from a seasonal perspective. We're going into an election here where pretty much every single time in my career we've gone into a presidential election, we've sold off into it and got bought up after it. With that said, I can't actually be really bearish on this market if the market technicals are still holding up. So Thursday after the Fed day, we had a big gap higher. The market extended a little bit. Friday, we created a pivot low, the SPY level on that pivot low. It's also next dividend day last Friday, so it's a little bit tricky, but that pivot low is 565, spot 17 from Friday of last week. And then we've kind of digested for 3 days. So in my brain, I have struggled to be really bullish on this market because it's just not being confirmed by my kind of broader fundamental thesis. But I've also been saying until we actually see the whites of their eyes on a break lower where we start to really break some support levels, it's hard for me to heavily push the short side. Now you fast forward to today, and today is a pretty interesting session, especially if these SPYs and Qs end up closing on lows, because we tried to have like a breakaway gap higher this morning. We tried to really break up with a big gap up this morning, and they sold that pretty heavily off the open. It wasn't just like an off the open pullback to equilibrium on a 5 or 15 minute chart that then sets you up for the afternoon bounce. I mean, these Qs traded from up, I don't remember exactly what it was, a 1.5%, maybe even a little bit more, down to flat. And if we close weak today, then you could be looking at some sort of like a technical push through failure, which then might start to line up a little bit more with my kind of broader, shorter to medium outlook bearish thesis that I have in my head right now. So, I've really refrained since I came back from a vacation right before the Fed from implementing new longs because I've been nervous about this market. And I've been trying to hold on to some shorts, some Q shorts. I'm short Nvidia right now. I'm short Tesla right now. So I'm really trying to stick with those. And if we get a week close today, then maybe I'm finally starting to get some degree of technical confirmation of the idea, which could mean that it's time to pounce. So, I have a tremendous amount of respect for both Sami and JR. So hearing, what JR was even just saying, what Sami was just saying about how they're a little more cautious on the market right now actually helps to lend me some greater degree of conviction in what I'm seeing as well. So we should do this more often. You got the dream team here, Sami, JR. This is the dream team at T3. We should make this a regular event.
Yeah, we don't
I struggle with the same thing, Derrick. I'm looking at household debt versus credit card debt. All-time highs, all-time lows simultaneously. Elections coming up, but then we have the really scary ISM data on one hand. But then you see, industrial metals and a lot of the transports really rallying, and it makes for a very, very trepidatious type of stance. It's really hard to tell which way it's going to go, in my opinion.
JR, what happened, my friend? You were a technician 5 minutes ago, 100%.
I am. But come on, you don't look at household debt versus credit cards?
Doesn't matter. Now
scary.
You're letting the narrative talk you out of maybe your technical analysis. That's
what I tell.
It's not that I can't analyze these other things that you guys are bringing up. It's just that they start to interfere with being objective and reading action objectively. Here's
what I tell my traders. I know what I know, but the chart is telling me that we're going higher, and it's a struggle for me. it's a struggle.
Right. So that's the same thing. If I was trading my thesis, I would be 100% short right now, and I'd be leaning into the short side. Instead, I've got 3 shorts on, and I've got 9 longs on right now, which actually, 12 positions total is light for me generally. I'm usually in like 15 to 30 or so. So I'm light on my positions. I've got some shorts on, and I've got some longs. And 100% agree with you on the technicals, but do you not also think that a push through failure on this move today, if we close red, if we close lows and have a nasty negative Maribozu, red Maribozu candlestick today, is potentially a technical signal that starts to correspond with some of the information that at least I'm looking at?
Right, correct. So you react to it, but you don't let your thesis get you into short positions without the technicals being in place. How are the shorts doing if you're short? Why? Maybe they're probably not very good. Why? Because the technicals have been really bullish. So the thesis.
I'm in the money on all 3 of them, but it's been tough.
My bad. But I'm just saying, in general, like if you're bearish, let's say you're thinking this is election year, anything can happen, and you went short based on that thesis, most people would probably be down money. So that's why I don't let the thesis or what I really think influence my decisions when it comes to trading. For example, today in the day trading room, the strategic day trader, I'm logged into the room right now. I'll tell you what I called. I just want to show you. The market dropped, right? And I word for word said after the first 5-minute bar, I said this is a wide range bar, and then we started to put in narrow range bars. So I was thinking this is lower. That's what I kept telling the room. I called one short, which is the PGY. And by the way, it's done marvelous. And I called Bitcoin long, IBIT long. I called NYCB long. I called everything else long. So why? Because the technicals were saying, on those charts were higher, even though the market was actually looking lower. So I try not to let, the market is not an external thing, but I try not to let what I think is going to happen in the economy or the market as a whole influence my decisions when it comes to trading, when it comes to actually executing the trades. Tesla, is Mike, didn't you send out an email showing that Tesla was like the only 38% of analysts are recommending it?
Yeah. So Tesla was by far the most hated stock among like Mag 7. So among the Mag 7 stocks, there are 15 sell ratings. 11 of them are on Tesla. So Tesla is definitely the most hated stock. So I'll throw out a question to all you guys.
Hold on. I just want to say one thing off what Sami said, which is really, I think that we're actually in pretty close overall agreement on the thought process. The technicals dictate what we do. And I really think that that's the bottom line. The only maybe difference is that I implement the fundamentals more in the background, where I'm only going to execute what the technicals do. But when I feel that my fundamental thesis lines up with those technicals, for me, that just means a higher level of conviction. That's really the bottom line. For me, then a higher level of conviction sometimes means a higher level of risk and potentially a higher level of reward when it comes in. But I think that you and I are pretty much aligned to like the 95th percentile on the thought process, with just maybe a slight difference in terms of the background information. But I'm not trying to do anything if the technicals aren't confirming that, because it's a great way to lose money in the long run.
Okay. All right. So I'll throw out a question to all you guys, and whoever wants to just jump in. Do you think people would make more money if they paid less attention to the news?
100%, million%.
Because it does seem like if somebody's bullish, like Tom Lee, everybody treats him like a kook, like he's a naive kook for being positive. So JR, what do you think? You think people should turn off the news?
Well, we just made 57 points shorting SMCI this morning, so I'm not so down on the news. I think it really depends. Like.
But most people.
I think
That's because maybe you know how to do it because you've been, you're a professional. But most people would be way better off not watching the news and
Yeah,
just
okay.
paying
As
attention
a
to
trader, I actually think as a trader, okay, when I start to see Rick Santelli's veins pop on television and markets in turmoil, I start accumulating. I start backing up the truck. You'll hear beep beep. That's my truck backing up into my brokerage account. So I think listening to what general market sentiment is as a contrarian can be highly effective if you're really paying attention to the chart, which should really dictate the majority of your decisions as a technical trader. So I think it's a little bit more nuances. I guess I'm being a pain in the ass.
So what JR is saying is, yeah, news could be helpful as long as you do the opposite of what's being said on the news. I don't necessarily disagree with that. But if you're listening to the news, watching the news to help you figure out what to do, the vast majority of people would be way better off staying away from the news.
Well, their business model lags like 3 standard deviations, right? They're breaking things that you already knew were going to happen 3 days ago as if they were breaking news. And then, obviously in terms of the adoption diffusion model, they're on the way down, so. Yeah.
Also, going off that, the incentive of CNBC is not to provide you information that's going to make you money. The incentive of CNBC is to get you to watch CNBC and, just hear what they're saying. So I almost never have CNBC on. When my buddy Josh Leffler is here, he always annoys me by putting it on. I'm at the T3 office in downtown New York right now. He always puts it on. Every once in a while, though, you get a real money manager on there, like they had David Tepper on there this morning, and I like hearing what those guys say. I think that there's value in hearing what like a David Tepper has to say. But for the most part, the talking heads on TV, I don't want to listen to that at all. But I still want to see and know breaking news as it's hitting, like SMCI, because that can sometimes lead to trading opportunities. And I also value research. I read research with like a very big asterisk with what I'm reading, like sell side analyst upgrades and downgrades, like 9 times out of 10, all they're doing is chasing price. It's ridiculous. Stock goes up, everybody upgrades it. Stock goes down, everybody downgrades it. It gets ridiculous. But some of the research that's actually out there, again, kind of going back more into market dynamic information that can help me understand the environment that I'm in, I find to be very beneficial. So, and this probably also just comes with experience. I think if you're a new trader, I would go with what Sami said. Learn the price action, turn the TV off. That stuff is just noise and it's going to confuse you. But at a certain point, if you have a higher level of experience, you can start to dissect what actually matters and what's important that could be actionable to you versus what is just the 95% of it that's just BS noise that you don't want anything to do with.
My old mentor used to always tell me the only non-lagging indicator in the market is price, and it's only non-lagging for 1 second. So I couldn't agree with you guys more.
Well, isn't it? It's also kind of funny though, like within this context of whether the news makes any sense. You see, like people will crap on CNBC, but if the guy on CNBC is saying something they agree with, in that moment they like CNBC.
True.
Quite fascinating. Okay, guys.
Confirmation bias, baby.
Absolutely, it's the most powerful force in the universe is confirmation bias. Okay, so we are coming up on our end time where everybody's going to unveil their favorite names. But let us know in the chat. Should we do this again? Give us a yes or no. And yes, Sami is live trading. What a maniac. I will say this. Sami,
aren't we all trading right now? Who's not? you're not, Mike. Maybe you should get a. Do you want to open an account with T3? I know some people.
I don't think I do. I think I do like 100 shares a month if I'm lucky. So I don't know if that's going to be a big account for you.
Well, I know some mentors that maybe you can get involved with as well, who can help you out a little bit.
I think I'm too much of a lunatic to be a trader. It would be probably, there would be stuff going through walls. I don't have the temperament. My dark side would come out. Okay, so we are going to wrap up here. So I'm going to start with my good friend Sami. Actually, no, I'm going to start with Derrick because he's today's world champion. Sami has lost his crown, unfortunately. I love Sami, but now I have to like Derrick more because he's the champion. So Derrick, what are you liking right here?
I'll be honest, there's not a whole lot that I'm liking. I do still really like the China trade, but I don't think that you can chase after this gap up and the gap up that we had a couple of days ago. I like the idea of looking for technical setups after we've had time to price or time correct this really big upside move, because I do think that there can potentially be more juice to squeeze from these stocks. But honestly, into today's move, I'm more in profit-taking mode. It's just a huge move in a short period of time than I am in adding mode. But I would keep an eye on those names. I still like them a lot. Outside of that, I'll be honest, there's not a whole lot that I like. It's kind of like I mentioned, if I can get more technical confirmation of the bear side of the market, which I don't fully yet have, we'll see what today's close looks like, then pushing maybe the Qs to the short side could be something to keep on the radar also.
Okay. JR, how about you? And again, and also a valid, nothing is a valid answer. Let's just make that clear.
I feel like Sami and I need to deconflict before these meetings because we probably have really similar watch lists. So I went long silver aggressively this week on the breakout. It looks to me like spot silver is going to finally break out of this rounding bottom consolidation, 36 maybe 38.50, and Bitcoin, I think, is ready to make its bigger move. Over 68,000, Bitcoin flies. So, Coinbase looks fantastic. Really, really like the way that looks today. We called it out early in the day for a long. And I think Mara and Riot look to me like they're bottoming, but I like Coinbase the best. Bitcoin over 68,000. I'll be backing up the truck.
Excellent. So, Sami, how about you? Is it Bitcoin?
Sorry, I feel like I stole your thunder, bro.
No, I mean, Bitcoin is pretty good, I think. The problem is, Mike, it's like asking which of your children do you like most or something. I have a bunch.
No, Sami, I disagree. Every parent has a favorite child. They just don't want to say it out loud.
They have they have a favorite child in terms of behavior, but not in terms of how they love them. So in terms of, so today, funny, JR, I didn't know you called out the Coinbase. I called out the Coinbase and Mara as well in the room today. So I do like those names, but it's not my favorite at all. It doesn't even come close. Favorite would have to be, like, if I were to go with a name brand, I would say Disney on the monthly chart. If I were to go with something a little bit smaller, I would say, DocU triggered in the newsletter today, in the strategic swing trader newsletter as a long. That looks really, really nice on the monthly chart. If I were to go with even like a smaller cap, I like the Vimeo, VMEO. We're long the Zillow. We're long Zoom also. Those look good off the monthly. Zillow and Zoom and Roku and Twilio. So there's a lot of nice, and silver is good. If you want a ticker that I have a call on right now that hasn't yet triggered, it's the EQX, which is silver. I think it's silver. It's gold or silver, but I think it's silver. So yeah, silver looks good. No, it's gold actually. EQX is gold. So silver, gold, some of the small stocks in the silver especially, but in gold, they look good. So out of these, which one is my favorite? I don't have such a thing. Tesla has been, it's my number one position, but it's already at like a target area. So I can't be saying Tesla. I think Tesla, we just talked about it last week, Mike, and the week before. I think eventually higher to 400 probably. But I can't say Tesla now that it's up so much. So so I've given you a lot of names. Again, if you want something that's well known and you feel comfortable about, I'll go with Disney. If you want something more speculative, maybe Vimeo or Docu. So it just depends. Or if you want Bitcoin looks good. Yeah. So it just depends on what the person is into, really. That's why you see traders that trade boring stuff, forex, and they make a killing, and other traders that trade really volatile stuff and maybe lose. So it depends on what the person is into, what their style and what they like to do and not do.
Okay, Sami, could you just repeat the ticker of that silver stock you mentioned?
It's actually gold. It's EQX. E, elephant, Q-tips, X-ray. EQX.
I will put it
It's
out.
over 652.
All right. I put the ticker out in the chat today. Okay, so folks, it seems unanimous. You people want more of this. We had before we came on the air, we had a very, very ugly conversation about hedging. It got out of control very quickly. I had to put it down because tempers were flaring. So stay tuned. We will be back again. Everybody, guys, thank you for coming out. This was a lot of fun. Everybody in the audience, we appreciate you coming out and saying hi. We will be doing this again. So stay tuned.
Thanks, guys.
Thank you, guys.